Hello, welcome to Books in the Biz, a podcast that looks at both the financial and operational sides of success. Please welcome our hosts, Dan Paulson and Richard Veltray. Dan is the CEO of Envision Development International, and he works with leaders to increase sales and profits through great cultures with solid operations. Rich is CEO of the Veltray Group and a financial strategist working with companies to manage their money more effectively. Now on to the podcast.
Welcome to Books in the Biz. Let me get us all straightened out here. Hey, Rich, how are you?
Oh, good, Dan. How are you?
Meanwhile, I'm trying to get this crap all figured out here. Hey, it is Thanksgiving time, so we decided this time around we're going to do our top 10 list. I'm going to share that here. Our top 10 business actions to take as you're heading into 2026. So as many of you know, or as many of you are preparing for next year, now that we're kind of getting towards the end of the year, I mean, we've got, this is going out the day before Thanksgiving, so really not much happens between Thanksgiving and Christmas, at least not from what I experience. I know a lot of people are wrapping up stuff. They really don't want to talk to me for the most part. They probably want to talk to you, Rich, because you're the money guy.
Yeah,
so
December's always busy.
Yeah. So you're getting ready for tax time, and I'm getting ready for kicking stuff off in the new year. So that's kind of where we're at. But we thought, you know what? It's probably a good thing to look at a few needs in your business, a few action items in your business that you should probably prepare for, given that there's only a few weeks left in the year. So I thought that'd be good to put together here. So yeah. Also, be sure to like, share, and subscribe this, especially if this is something you feel is valuable to other people as well. So let's kick off our list here, Rich. I am going to go ahead and start us off, and I thought I'd start off with one of the biggest topics of probably the last 12 months anyway, is the artificial intelligence. I cannot turn my head anywhere without hearing something about AI. Our last two episodes were about AI, and I think that's going to make a major impact on business going forward. Now, I don't know how much you actually use it, but with a lot of the training and stuff that I do, I actually find things like ChatGPT to be quite helpful because, of course, everyone wants something unique for their training programs and for their development stuff. So I use that as a tool to kind of cheat and actually work out some of the activities I'm going to be doing, because it's actually a lot easier to ask chat to say, hey, what are some good icebreaker activities? What's a good facilitation session for this type of topic? And it'll give me some solutions that I can then modify and apply to the work that I'm doing. So for me, I found it helpful in those ways. I don't know how much does a finance guy use chat or any of the other AI sources that are out there?
It's coming along.
Yeah.
I'm getting my feet wet. Let's put it that way.
Mm-hmm.
But I do know that there's a lot of people out there who are using it, especially in the checks and balances part of how things are supposed to be. Looking at the results of a financial statement and then saying, please check this, and in Chat GPT or one of the, other AI related softwares can look and see if the numbers make sense based on the contracts that you have.
Mm-hmm.
It can also sort of the things that, we used to call tick and tie, where you would, sit there and have a spreadsheet and you'd actually, put a tick mark next to, yes, I checked that. Now AI can actually do a lot of that stuff. And then, building financial models. There's stuff out there now where people are actually using ChatGPT or other AI software to build the model itself,
Mm-hmm.
and then they're doing more analysis than data entry.
Yeah, I think you even mentioned a case where you're using a tool like that for M&A situations where you've got to analyze the data and you're actually asking the tool to kind of explain what they're seeing in the financial data, maybe to make recommendations for valuation of the business or for issues that you might want to watch for as you're starting to work up your letter of intent, stuff like that?
Yeah, definitely. The and looking for anomalies, anything in there that normally you would do with your own eyes.
Right.
Now you can let the computer somewhat do it.
Hmm.
I don't recommend just kind of handing it off and saying, using that as my ultimate decision, but it's always helpful when you think it's something and the computer comes back and says you're right, then at least it's almost like second set of eyes.
Right. Yep. Exactly. Uh,
So
it's a good for checks and balances, but I agree with you. I don't think it's been perfected yet. Like I said, even when I'm using it, it's a tool I use to either support or adjust what I'm doing. So it's
yep,
coming along, but what's happened in the last year or two is it's changed quite a bit. It's really gotten better. So it is improving, and I do think we're going to see more business applications for it. Of course, every company out there seems to have some sort of AI function for it,
yep.
whether or not it's really AI or whether or not it's useful. That's another story right now. But like I said, I think it's coming along, and it's definitely something you need to watch and see how you incorporate it into your business.
Great.
Rich, the next slide is for you.
All right. So for everybody out there, one of the things I suggest that you do for 2026, doing it now for 2026, is understand your balance sheet. There has been way too many times that somebody will come to me and say, we need a projection or we need financial statements. How did you do for the last 10 months of this year so far? The year's coming out to the end. How does it look? And I always tell people, have you looked at the balance sheet as well? And the very specific reason I tell people to at least look at it is understand what's on your balance sheet, because your P&L alone is not enough. If your P&L, I keep saying P&L, let's go back a second because Dan will yell at me. So P&L is your profit and loss. If you're using your profit and loss statement and saying, here's how we did, if anything is wrong with your P&L, the only way it can be wrong as far as your net income goes is that there's something wrong on your balance sheet as well. If you classified something to office expense and it should have been auto expense, your net income doesn't change. It's two things
Right.
on your P&L that are offset. But if you accrued something, okay, if recorded a liability that doesn't exist, then you're showing an expense that really probably could be wrong. You don't know.
Yep.
And that would mean that you've got a line item on the P&L and a line item on the balance sheet. So
Right.
take a look and make sure you understand what's on the balance sheet, and make sure that your bookkeeper or whoever's doing your internal work is actually going down through each account and making sure that they're reconciled, because then your profit and loss is something you can rely on.
Yep. Plus, keep in mind that payables and receivables hide on your balance sheet, not on your P&L. So
Exactly.
that is something that I think many people often miss when it comes to they look at the P&L and, oh, I make all this money. Yeah, but you haven't collected that, and it's now 120 days out, so you got a problem.
Yeah.
So very good. Next one, number 8. Focus on hiring. I think. Well, let's put it this way. I believe 2026 is going to be a potentially good year for businesses to hire. And I think you'll get into some of that later as to why. We were talking last week about some things to watch out for coming up, where there could be some doom and gloom in the marketplace. But again, I go back to number 10. I think a lot of that's centered around the AI stuff. But overall, what I see is more business coming back to the U.S. Not everything's going to come back, but we are seeing, where stuff happened over the last couple of years, with COVID and everything else, which has caused some reshoring to happen. Along with that, now that supply chains are settling out, one of the things I think we're going to see is companies needing to hire bodies to put them to work. And there may be a number of reasons why that's occurring, but I'll just stick with the simple one. I think if things go well with some of the stuff you're going to talk about later on in this podcast, I think there are going to be companies that are going to see potential for growth, and also the possibility that they're going to need more people to hire. So this is an opportunity where I think they're going to find some good talent if they look around. I think they do need to look at how they hire, how they onboard, and how they career path those people that they bring in so they can retain them. Because the last thing you want to do is spend a bunch of money hiring people that turn around and quit within 3 to 6 months, or you hire the wrong people and then you have to fire them in 3 to 6 months. So I think there's going to be a greater focus on hiring and making sure you get good talent and know where to put that talent in your organization. This also is potentially something where AI eventually is going to maybe help with some of this. Mm-hmm. Not quite sure 100% how, but I think there might be some potential there with reviewing things like resumes and whatnot, or helping develop those tools to help with the hiring process. So that's kind of my thoughts on hiring. I don't know what you're seeing out there, Rich. I know in the accounting world there's still a shortage of accountants and a shortage of good ones at that. So it's going to be a little challenging.
Yeah, I think that's a challenge. I think I would only add one other thing. Make sure when you're focused on the hiring, especially if there is a boom, which I seem to agree with you, I think there's going to be a chance here for everybody to kind of retool and refigure how they want to do 2026. But do yourself a favor and recognize that there's a political environment around who's a proper hire and keep it compliant. If you have forms that have to be filled out, I-9s, etc., if you need those things done, get them done. The penalties are already stiff before all these immigration and checks and balances that seem to be getting added every single day. So do it compliantly.
Yes.
And when you're focusing on the hiring, focus on your practices for hiring.
Yeah, and I would say that's, while it's still possible in the professional white-collar world, definitely for those construction and manufacturing people that listen to this, got to be careful there because, the penalties are going to be stiff and swift, I believe, when this comes about. All right, next one, number 7.
Yeah. So focus on what I'm putting here as tasks and workflows. The reason that I say that is there's plenty of people out there talking about, how accounting, etc., is not as important as they want you to believe. Like they want you to believe that it's not important at all. But then I saw an article yesterday where some of these big companies, which I shall remain nameless. Okay. That somebody out of the blue just started sending them invoices and they paid them. Okay. So workflows would be, there are 3 pieces of paper you should have before you pay for products that you received. And that, we used to call them the white, pink, and canary, because the white was the invoice you got from the person that says they owed you money. Then you would look at delivery receipt and you would look at the purchase order. Did we ask for it? Did we receive it? And therefore, is this bill correct? Okay, those are the 3 things that you have to do on paying a bill. This guy was getting paid without those 3 things. There was only the invoice. And he got paid. So
how does that change? Let me ask you this, because, in today's day and age with QuickBooks and everything else, you just hit a button, send out an invoice. There is typically no triplicate copies of anything. What should companies do in those situations?
Well, the fact of the matter is, if you look at accounting systems right now, one of the leaders in automation is on the accounts payable side. So these big companies probably are using a system that would allow them, when the invoice comes in, somebody has to approve it. Okay. So even if you don't have 3 pieces of paper with 3 different colors, like we used to have 20, 30 years ago, you still have some of the basics, which is the price right? And usually the person that approves it knows that the price is right, because the person that approves it should be the person who ordered it in the first place, or is responsible for it and can go ask, did we order this and did we get it? And that isn't just, did we get the box? It's, did we get the services? Okay. So you could go either way, right? So there may not be a delivery document because there was no UPS or FedEx showing up with a package. Okay. But somebody was responsible in saying, we got what we were supposed to. That's a proper invoice. So again, focus on closing out 2025. If you got anything ugly, put it under the river, put it under the bridge.
Right.
It's something you can't do anymore, but how do you go into 2026 in a much more clean and efficient manner?
Yeah, that is a very good suggestion, because I don't know about you, but between text messages and emails of stuff that is completely fictitious, and I get a lot of stuff that shows up and says, click here to open this invoice. Well, most of the time that's malware. So for one thing, don't do that, especially if you don't recognize it. And I would say, even if you do recognize it, say it came from a credit card account or something that you do have, don't click on the link in the email. Go to the website and go in there, because if it's real, it'll still be there. If you click on the link, you don't know where you're going to go or what you're going to get into. So be careful with that. All right. Number 6, supply chain improvements. Like I mentioned earlier, I think we are seeing tremendous improvements in the supply chain in the past 12 to 24 months. I am seeing more and more situations where there are fewer delays in product getting from point A to point B. As we remember during the COVID time, the not so long ago, everything got delayed or everything got put off, including some critical supplies that were coming from other parts of the world that now we can get here in the U.S. I think we're seeing some more stuff being reshored here in this country that is going to make it easier for us to get goods and materials, or at least reshored to nearby countries, i.e. Canada or Mexico. That is going to help with that. I also believe that's possibly going to help with some costing issues, because it doesn't have to come as far. Now, you might pay a little bit more because labor obviously is higher here in the U.S. than it is in some other parts of the world. But when you factor in lost revenue due to lost orders because it took too long to get materials in, I think it's going to offset, and it's going to make more sense to deal with it here. So supply chain is improving. I think that's going to help in making goods and selling product. We'll have to see how that works out, but I'm fairly optimistic that this year is going to be a much better year for getting materials, and also getting materials, I'll say, at a reasonable price. Now, again, I think with some of the tariff issues out there, the closer it is to home, the less you have to deal with that. So that's also got to be factored in as well. Rich, how about you? What's your thoughts?
I totally agree. I think, with the tariff upheaval, I think, think about it a little bit, how you think that it's going to be for 2026. Pricing, things that, how are you pricing your product? How is your competitor pricing their product? And, what's the effect, or what do you think the effect is going to be with all the turmoil going on now? Hopefully they can figure it out. But if you have any insights into that, think about it now so you can leave your baggage in 2025 and move on to a clean 2026.
Yep. And I will link this back to your last point about workflows. So you talked about workflows in finance. This is also a good time to look at your workflows and operations. How do you start streamlining, adding technology, adding new equipment, maybe to find other ways to get some cost reductions or right-sizing some of your costing by using better tools or utilizing your people better. So that's something that also kind of ties into this, and that's where you can take advantage of maybe where there might be some little higher costs with supply chains because it's more localized, because you're dealing with higher labor issues. You can also make up for some of that by being more efficient. So I would encourage you to do that as well. All right, number 5.
So I wrote down here capital expenditures. I think that capital expenditures tend to wind up being a surprise. Okay. And I think that getting, as you and I have talked about so many times on so many episodes, getting people to stop being reactive and a little more proactive. That's why I threw this one in there, that, if you're in some degree of construction, I tend to know some people who are doing excavation, and those excavators, even the small ones, are not cheap. So when your excavator goes down and now you have to get a new one, $75,000, $85,000, $90,000 on a machine, it can be a pretty bad surprise if you weren't planning for it. So I say for people to take the end of 2025 and look at how am I going into 2026? Is there any possibility that I might need some cash for, putting down on a new piece of equipment and, plan for it? Wow, proactive rather than reactive. So plan for and be proactive about what else might you need in 2026. Start to prepare for it now. And then we'll talk about taxes in a little bit on how that's affected in another slide.
Yeah, and let's be clear, planning is not waiting until December 25th and realizing, oh crap, I'm making too much money, I need to buy a couple trucks. That is not planning.
No.
We agree on that, right?
Yep. 100%. Okay. Real quick, okay, all those people
Yep.
that know the rule about the 6,000-pound SUV, okay, after you get the little sliver that you actually get for writing that off, you still have to pay for the big SUV.
Yeah, exactly.
So,
last I checked, that big SUV was also over $100,000 right now if you're at a 6,000
they're not
pound
cheap.
limit.
Yeah, they are not cheap.
Nope.
So yeah, that's what we mean about the overall full-fledged plan, as opposed to go buy a truck and a trailer because it's December 31st and I need to write off some taxes.
Exactly. All right. Next one, number 4. Hey, Rich, I don't know if you knew this. I know you knew this, but I don't know how many other people know this. I'm in the process of writing a new book.
Very
And I think
cool.
you're going to be part of it to a certain degree. So we're actually, we've talked about the Mac system. The book is really about escaping the owner's trap. And we're going to talk about the tools that you're going to be able to utilize as far as utilizing Macs to improve your business and put in place business systems that will make Rich really happy, because a lot of it is centered around metrics and financials, and along with operations on how you get the results that you want. So I'm happy to say that right now I am starting on chapter 9 out of a planned 15 chapters. So I am plugging away through it. I've got a few people reading some of the drafts to see if they are good and see if they, what sort of improvements they need. But I am hoping probably by January or February of next year, you will be able to buy this book. So here's my official announcement, Rich.
Very cool.
So that's all I got to say about that. There isn't much more to add, but keep an eye out on social media. I'll be posting some little tidbits that you'll be able to review from the book. Let's go on to number 3. This is also a rather big one. Rich, tell us more about tax breaks.
Yeah, so really for every small business out there that might be listening to the podcast, one of the things that you should be thinking about is the fact that the tax law that was signed on the 4th of July, I think it was the 4th of July, on the 4th of July, reinstated the 100% bonus depreciation, which, everybody knows about Section 179, which is where everybody talked about writing off the SUV over 6,000 pounds. But 100% bonus depreciation means if you buy equipment within a certain parameter, if you have certain income, if you have certain income limitations or hurdles that you're already in between, then you can go and actually the equipment that you buy can all be written off in the first year that you buy it. Where it used to be that you had to depreciate something over the useful life of the equipment, could be 5 years, could be 7 years. At this point, everything, 100% of it can be written off in the first year. There's also a quirk in there that they added a category which included buildings that were in place for technology, etc., placed in service in the next 6 years, I believe it is, that they can actually write off 100% of a building in the first year that you actually own it. So take a look at tax breaks, take a look at the changes, make sure that in your last quarter's estimated payment, if you're making estimated payments, make sure you've taken that into account as to whether or not you needed to make the same. Because a lot of people got planning from last year, which included paying what you paid last year. But
Right.
The laws have changed. And if you're not looking at it, you will overpay. You'll pay that fourth quarter payment, which you'll pay last year, but maybe your taxes came down because of that new law. So make sure you go into 2026 knowing that you've looked at what your liability was for the 2025 tax year.
And this one, to me, is a big deal, because that's a lot of money, especially if you were thinking about building a new building and now you can write all that off. Last I checked, buildings weren't cheap. So
Yep.
that's a pretty impactful move.
One
But
last additional
yeah,
piece
go ahead.
for everyone. Okay, even if you're saying, that Veltri guy, tell him to keep quiet. We're not buying any equipment in 2026. Like, think about the fact that you also had a change in what's deductible for state and local taxes. I live right outside New York. Okay, so I know
Mhm.
anybody that's listening to me from the New York area, you got a definite change in your taxes if you own a piece of property or if you're paying state taxes. It used to be limited to 10,000. Now it went to 40,000. So, there's a change. No matter what, just about everybody has at least some change in this law.
Yep. So definitely check it out and talk to your tax advisor or talk to Rich. He might be able to help you with that too.
Sounds
Great.
good.
As you notice, though, Rich, we've got two more to go, and that wasn't number one. Though that is very impactful. I thought there were some other things that we might put ahead of that because I believe that the next two kind of lead back into where you can utilize those tax breaks. So, as you well know, and as some other people know, because we've been promoting it a lot, we have two different surveys out there that you can take that will help you figure out how to optimize your business better. And the one I'm talking about here is the 20 question survey. So, this I bill as we will take an hour of your time, we will ask you 20 questions, and with that, we will find either opportunities for growth or opportunities for savings that you can then turn around and apply to your business immediately. So these are actionable items. This is a rather short report and a quick report. So it's not a deep dive, but it's good enough to kind of point out maybe where there's some necessary improvements and ways to minimize loss that you can quickly act upon. And we'll try as best we can to monetize, where the advantage is to that. Now, because this isn't a quick dive, this is a relatively inexpensive report to get. It's only about $500. And like I said, it takes about an hour of your time. And within a couple days, you'll have a report back to you pointing out where things are at. And we'll break that down for you as well. So to me, this is a really good tool, especially for this time of year, especially for those small to medium-sized companies that probably don't do regular strategic planning or anything like that. This is a strategic report that'll help you figure out where you can improve.
Yeah, this is a good one. This is what I refer to as the less intrusive
Mm-hmm.
report, where basically you can answer the 20 questions with us, and we can usually pinpoint something that can improve, even if we're just honed in on one thing. So, it's a good economical way to get a picture of your business and potentially get something that you might not be thinking about. So, give it a shot.
Yeah. And in most cases, the information that we're asking for, you either can readily get in a matter of seconds or you probably know off the top of your head. So that's the main difference between this one versus our number one. Rich, take it away.
Yeah, the succession report is a bit more intrusive because we ask for documents to look at. Might be financial statements, might be internal reports, might be, some trends or, some things that you might have to take a little bit more thought to or, you know, pull some actual numbers that, to answer us on these things. But we spend a little bit more time on it. You can spend a little bit of time with us on it, and while it probably will wind up costing more, um, it really does give you very good insight as to what's going on in your company that maybe you're not thinking of, but from the outsider looking in, we can give you some ideas. um, so I think this one, again, really, it's a lot of fun actually for us because we like to look at different companies and then we get different insights to it, and that gives us time with a lot of business owners too, because that really gives us the rapport with people to get some ideas of what's going on, not only in that company but overall
Right.
countrywide. You can really get a picture of things that are happening, and that gives us insights as well that we can use to help you to really focus in on how that affects the company.
It,
And
it, yeah, exactly.
yeah.
That's this one, even though it's titled Succession Report, I think any company can use it. But we derive this report basically because we know there are a number of companies out there, a number of business owners out there that are kind of getting to that point in their career where they're thinking, what am I going to do with this thing and how am I going to make money off of the sale of this, because I do believe a lot of them count on it for their retirement fund. And probably a pretty substantial part of their retirement portfolio is coming from the sale of their business. So we want to make sure you maximize that value as much as possible. The whole idea behind this report is to find those blind spots or those roadblocks that are going to prevent you from getting the most out of that sale. So that's really what it's about. But again, we uncover operational and financial issues that, regardless if you're planning on selling tomorrow or 5 years from now, you'll be able to find different ways to improve, and that'll help you grow. So very good. Well, that ends our list for Thanksgiving. I hope everyone has a happy holiday weekend. Rich, have you got any big plans? Having a bunch of people over? Can I come over for pie and turkey?
Small gathering.
Small gathering.
Yep. And how about you?
We're filling the house. I'm cooking a bird on my big green eggs, so we'll be eating some brined and smoked turkey along with ham and mashed potatoes and God knows what else. I think I got enough food to feed an army, but we aren't going to have quite that many people. And it's going to be cold here, so it's going to be fun for the cook sitting outside and freezing to death while I'm trying to get the turkey done. But anyway. Just to wrap up here, you can contact us at XCXO. You can reach me at dan@xcxo.net. Rich, how can they get a hold of you?
Or me at rich@xcxo.net.
And then you can also catch other podcast episodes at booksinbiz.com. That's BOOKS, letter N, BIZ.com. We are also on YouTube and all the other podcast channels, so check us out there. Rich, it's been fun. Hope you enjoy your Thanksgiving dinner, albeit small. It'll probably be easier that way. Hopefully it's a small turkey. And we will talk to you next week.
Sounds good, Dan. See you then.
All right. Take care.
Want to boost your sales and profits, but need the talent to help you grow? XCXO is a one-of-a-kind platform to find skilled fractional executives to help develop your team into a high-performance powerhouse. Fractional leadership is a great choice when you consider the average executive-level candidate can cost you hundreds of thousands of dollars in salaries, benefits, and incentives. XCXO finds you the executive and utilizes their talents to build your team's experience, all for a fraction of the cost of a full-time C-suite leader. Contact XCXO today to fill the gaps in your leadership team. Visit xcxo.net to learn more.